Hello, everyone. Welcome back to Navalier Market Buzz, episode 31. I'm Crystal Navalier, and I'm joined again this week with my father, Louis Navalier. Now, I know everyone is probably feeling very anxious with this past week. So, Dad, let's talk about what a third standard deviation event is.
That's where the market breaks through all its support levels and goes extra low. It happens during what we call a capitulation day, which is panic selling, where everybody just throws in the towel and it sells at any price. And that's what happened on Friday. And it's very unfortunate. It's very nasty. But it happened, and it happened on high volume, which is indicative of the panic selling. I think we were talking earlier before we start, we're almost back to pre-COVID levels in the market. And so we've erased a lot of gains, and this was very, very painful. But the typical pattern is we have a reversal, and then it goes back and starts to retest the lows. Now, one of the signs of the reversal was the shoe companies. What happened is uh, although President Trump was playing golf on Friday, which didn't help the market, by the way. And I think we're going to talk a little bit more about that. But he had a chat with Vietnam afterwards, and all the shoe costs are supposed to go up because there's pretty big tariffs on Vietnam. And so somebody like Nike, it was really hurt. So there was a reversal in those kind of stocks. So as we get drips and drabs that we're cutting deals with our trading partners, things will should firm up. Now, why the market was in such a piss poor mood on Friday was, of course, China slapped 34% retaliatory tariffs and also curtailed the sale of rare earth minerals to America. We need those in our semiconductor chips and things. So that hit those stocks. But obviously the market doesn't like the tariffs at all. One of my favorite economists, Ed Yardeni, called the tariffs insane. And I've been listening to Scott Bessent, our Treasury Secretary, who President Trump really has as administration spokesman in all this. And he's blaming the Magnificent Seven more than anything else. But we are going to get a reversal because the shoe companies were severely impacted by the tariffs. And if they can bounce just because Trump has a conversation with Vietnam, then the whole market will be bouncing soon. And of course, we have good earnings about to come out.
I'd love to go back to something that you had mentioned. Our president was playing golf last Friday while the stock market was melting. What's going on? How can you justify this?
He left his lieutenants in charge. Okay. One thing that Trump is doing in Trump 2.0, this new administration, he's clearly, he's let Elon take a lot of the heat for the tough stuff he's doing. As far as the tariffs are concerned, the leading spokesman is Scott Bessent, but the Commerce Secretary, and Scott Bessent's the Treasury Secretary, but the Commerce Secretary, Howard Lutnick, is a lot louder than Scott Bessent and a lot more controversial. And he's had a couple rants this week, past week on why the South Koreans don't import our potatoes and why the Europeans don't like our beef, even though our beef is better than their beef. And he just went on and on. I love Howard. I find it very entertaining, but a lot of people are finding him to be trying. Okay, I know Howard, so I understand him. Commerce Secretary is a cheerleader for America. And so it's a high energy job, and you're supposed to fly around the world and again be a cheerleader for America. The ultimate goal of these tariffs is to get about 7 trillion of onshoring, which is apparently underway. But yeah, obviously President Trump he doesn't care. He's been wanting to do this for 40 freaking years. The other thing about President Trump is that he is politically very skilled. When he introduced his Liberation Day tariffs on Wednesday, he had 25 UAW workers there. Um, and he had one speaking from Macomb County, Michigan. I used to manage money from Macomb County. And uh, he clearly won the UAW vote. Sean Fain, the UAW leader who opposed him viciously during the election, is now praising him. So he's got the UAW, the Teamsters, the International Longshoremen. He's stolen the Democratic constituency, for lack of a better word. Also, they're criticizing that these tariffs are going to be inflationary, and this is opposition, and they're going to be enriching billionaires. And apparently, because when they do the tax bill, they got to do reconciliation. Trump's thinking of raising the tax rate on very rich people just to stop the arguments from his opposition. So, it's an interesting. He's a man of the people, and he cares more about the people than those of us that invest in the stock market. But I think long term, he wants the stock market to do well. It's interesting. I was at the Money Show, and I was talking to Charles Payne, who we hope we can have as a guest on Market Buzz, and some other people. And um, when Larry Kudlow was in the White House, he was the economic advisor. Trump used to go in there and check the stock market with Larry a lot. So in the end, I think what you're going to see this weekend, they're going to have some announcements that is going to lift the stock market on Monday, and and that's what they'll be doing.
We've been talking about the Fed rate cuts a lot, but CNBC just predicted that it's going to be about 4 to 5. Is that the same prediction that you're expecting?
Yeah, I'm predicting four. I have been all year, and I'm just going to stick with four. Uh, Most people thought I was clinically insane. I even said it on Fox News recently, and I was got a pretty skeptical response about my prediction. But why I was so adamant about that is I've been anticipating this collapse in interest rates from Europe, and that collapse over there will trigger our rates to go down. And of course, our rates have gone down in what is called a flight to quality, and it actually has made Treasury Secretary Scott Bessett's job a lot easier because it's easy to sell treasuries now. It's going to be easier to finance the debt. And this is the other conundrum the Trump administration has is they want interest rates down. But because market rates are falling, CNBC is now predicting up to 5 cuts starting in May and running every single FOMC meeting. I'm expecting four. So I feel vindicated. I'm happy, but I'm not happy. It happened because of the stock market sell-off, and that's the real reason that it's happening.
You've mentioned before that declining rates typically help financial stocks. Which ones do you expect to be, and can you share those stocks?
Yeah, so earnings season is kicking off next week, and we're going to start with JP Morgan. They're the leader. Jamie Dimon is more powerful than Jerome Powell, our Fed chairman. I would say he's not more powerful than our Treasury Secretary Scott Bessent, but whatever Jamie says is important. And their sales are supposed to be at 5.1. Their earnings are supposed to be at 4.9. And the analysts have been revising their earnings estimates higher. This has a very strong earnings surprise history as a stock. So I'm expecting great results from JP Morgan. Now, all banks have loan loss reserves. All banks that issue credit cards, and JP Morgan Chase is huge in credit cards, plan a certain default rate on their cards. So they will probably have some sort of commentary on distressed consumers, um, and that's going to be closely watched by Wall Street. But after JP Morgan, we are going to have Wells Fargo. They beat last quarter, so we're expecting them to do good. The Bank of New York Mellon should be okay. Then we get Morgan Stanley. Now, Morgan Stanley's not a traditional bank, but they sell a lot of private credit, a lot of alternative investments. So their results will be interesting, but they're supposed to be okay. And then finally, we have BlackRock. Now, BlackRock uh, obviously is a behemoth. They've been, believe it or not, helping the Trump administration buying assets in Panama and things around when the Panama Canal thing came up. They came in and bought some of the port facilities to crowd China out. BlackRock is also venturing now into private credit, which is was a $2 trillion a year industry. I'm sure we're headed to $3 trillion a year. And this is where investors can go, their financial advisors, and they will literally sell them things that yield 11%, but they are buying leverage products. And I worry about the private credit industry because it could end badly if one of them defaults. But right now, the way our financial system is set up, if you have a perfect credit score, you can do business with banks. If you don't have a perfect credit score, there's these secondary institutions that will lend you money, subprime lenders, and then they end up raising money in the private credit world. And so I'll be interested to see if that's affecting BlackRock. Probably not. But yeah, financials lead the way, and the falling interest rates do help them. So, and even if they were not perfect this last quarter, but they should be fine. The dramatic fall in interest rates we've just had is going to help them next quarter. So they should be guiding higher, and they should help the market uh, recover.
There are a few S&P 500 companies reporting earnings next week. I was hoping that you could share what your expectations are, starting with CarMax.
Well, CarMax is interesting. Their sales are supposed to be up 6%. Their earnings supposed to be up 104.8%. The analysts have revised their estimates higher. They had a huge surprise in the previous quarter. So not only are they expected to be good, the other thing that's going on is used car prices are going to be up because of the tariffs. So I should explain that. Volkswagen Group, via their Audi division, Volkswagen has Audi, Bentley, Bugatti, what else? Oh, Porsche, Lamborghini. They literally stopped all the Audis at the ports, including the Audis made in Mexico, the Q5s made in Mexico. And they are sitting at the ports waiting for the tariffs to be put on them. So they will be complying with the tariffs, and they will be price adjustments at the dealerships. Now, obviously, they may get stuck with a bunch of inventory, and they may have to move those vehicles with financing, which Audi's pretty good doing. So it's going to be interesting. Hyundai has said they're not going to raise their prices until through June. So that's a good sign. Ford is offered employee pricing. So ironically, they are the car companies are trying to take this situation and suck up to people and reward them. So if we go back and look at the car industry, there are 25% tariffs on vehicles now. And on the USMCA, which is the U.S. Mexican Canadian trade agreement, the 25% will be on the non-U.S. part. Audi is not part of USMCA, just so you know. Even though they make cars in Mexico, and so that will be interesting. But Ford will have to pay a little bit more. GM's going to pay a lot. The Traverse, Equinox are all made in Mexico. The one will pay the least is Tesla. But they'll pay some. And long term, we expect the foreign automakers to divert more of their manufacturing to the U.S. Obviously, we have the South Koreans here, the Japanese here, and the Germans here. And but it's interesting. The BMW plant in South Carolina, most of those parts in the BMWs come from Europe. So if Germany's smart, they're going to have to put a lot of their, Bosch and a lot of their suppliers. They're going to have U.S. facilities and make those parts here. So these tariffs are meant to onshore, and that will definitely be happening. And but in the meantime, used car prices will probably be very, very firm.
And what do you predict for Walgreens?
I don't want to say it's a dead stock, but it's just been so incredibly boring for so long that I feel for it. but their sales are supposed to be up 2.3%. Their earnings are supposed to decline 56.6%. The analysts have not cut estimates. That's a good sign. And they did surprise the last quarter. So I'm hopeful for them. But you know, all that shoplifting and all those lock cabinets and you know, I realize the shoplifting laws have been reversed in California and places like that, and it just really has hindered them and CVS. But if they have another surprise, that would help. But again, their earnings are supposed to be down quite a bit, 56.6%. So we'll see if they can do a little better than expected.
And finally, what do you predict for Delta Airlines?
The airlines are okay. And by the way, we've had the dramatic collapse in oil prices. Oil prices the lowest level in 3 years. That's for two reasons. One is OPEC has boosted their production. And two, everybody thinks the world's going to be in recession, demand's going to drop. So it's very odd for oil to drop this time of year because we're now in the spring and global demand usually goes up. But Delta sales are supposed to be down 0.6%. That's not significant. Their earnings are supposed to be down 2.7%. Analysts have been trimming estimates, but I would not be surprised if Delta ekes out a surprise. The biggest problem the airlines have are these weather events, okay? And, we have this atmospheric river that was sitting over uh, basically Nashville, Tennessee, all the way up into Ohio, and it wasn't moving. That's, where the Gulf moist air hits the cold air, and it was spawning a lot of tornadoes and a lot of rain. And those are kind of the things that mess up airlines. Delta, of course, had its regional jet flip in Toronto. And of course, everybody got out okay, but that's obviously embarrassing. So, but they have a great hub and spoke system. They got a lot of loyal customers. And so I think they'll be okay. But they're not as good as United, Alaska, or SkyWest, which are the airlines I own.
The ISM Manufacturing Service data was not that strong last week. Does that mean we might be entering a recession?
Yes, but before I say we're entering a recession, I want to clarify it. The manufacturing data turned down. It was very disappointing to me. It had been up 2 months in a row, and now it's down again. There were some green shoots in the report when I look at the components. It looks like it was mostly business investment freezing up. But we have falling rates now. Home sales are going to be going up. In fact, the home builders building stocks were going up on Friday when the market was going down. And uh, home building creates a lot of orders for your home and everything. So, and a lot of durable good orders. So I think it's going to improve for next month. The service sector was also very disappointing. It had a big decel, but it's still growing. And the majority of the industries the ISM survey are growing, but obviously there's some weak spots. So yeah, we slowed down. We have to get our mojo back. We have to cheer up. We're going to be talking about negative GDP growth. I have a chart you're going to be showing, and um, early in the first quarter, we were blaming the weather because the weather was extreme in January, and so we had the fires in LA, and we had more extreme weather in February, and we just did not improve in March as much as we hoped. But hopefully, we will get that improvement in April and May because everybody loves the spring. Everybody gets out and about more. So um, the weather alone should get everybody out and about.
The Atlanta Fed is pretty bearish based on their GDP forecast. Why did they separate gold from their GDP estimate?
Well, we had a bunch of gold dump in America. According to CarMax, went up 43% in January, 25% in February. One of the places you get gold bullion from, in London, has been so busy shipping gold to America that they can't fulfill the orders in London as quickly as they used to. Obviously, gold has surged. I recommend five gold stocks. And the reason it surged is it's largely due to a lack of confidence in central banks. I think it really started with China. A couple of years ago, people tried to take their money out of some Chinese banks, and they were told no, they couldn't withdraw their money because it was investment. And they dispatched tanks on the street. Plus, they got a weak currency, and that riled everybody. And a lot of people have lost confidence in their central banks, with like the European Central Bank and the Bank of England. Our Fed probably has the most respect of any of them, but I can tell you, like the Bank of England, their governors on that board can't agree on anything. The dispersion is unsettling. Okay, so people are turning to gold as an alternative, and it's no different than the Bitcoin boom, but it's gold's been a traditional store of investment and an alternative for centuries. So it has a little head start over cryptocurrencies. But if we back out the gold reserves, instead of contracting 2.8%, we're only supposed to contract 0.8%. But trade has also distorted the GDP. And to be honest with you, we had goods dumped in January and February, and but anytime you get all these goods, everybody has to move them. It's interesting. Going back to the tariffs, everybody's very worried about all the cheap goods we import from Asia. And it's not just China; it's Vietnam, it's Thailand, it's Taiwan, and I want to defend Taiwan because they do make a lot of quality things, like all the fancy bicycle components. If you're a cyclist, they make all the Shimano stuff and stuff. It's very good. But they also make a lot of furniture. And they had the Wayfair executive on Bloomberg, and she was not worried about the cost of furniture and the things they sell. I guess she's so confident in their ability to shop and outsource and acquire things. But Restoration Hardware and things like that are we're nervous because the cost of their goods are probably going to be going up with the tariffs. But yeah, it's we're going to have negative GDP first quarter. It's all gold and trade distortions.
Why didn't the DOGE cuts show up in the March payroll report?
They did the survey a week earlier than a lot of the cuts were announced. You're showing a chart that I actually used at the Money Show showing where the job losses are. And you can see it's overpowered by government jobs. So the government jobs will be showing up in the payroll report. And ironically, that could cause the Fed to cut rates as well because the Fed has an unemployment mandate. But it didn't show up in the March data, but we expect to show up in the April data.
Several Fed presidents are speaking next week. Are they trying to send a signal?
Absolutely. Jerome Powell, the Fed chairman, spoke on Friday and didn't really give us much. As always, he's got to assess the data and build a consensus. But I think you'll see when multiple Fed presidents are talking, the consensus will be that they'll be cutting rates. And the reason is that as a Fed official, you can't fight market rates unless you want to be restrictive and cause an economic slowdown, and none of them want to do that. So they'll be out and about, and that every Fed president that speaks will hopefully give a little boost to the markets. I want to just reiterate that the fear out there is for inflation, especially stagflation. Stagflation is where we have inflation, but we don't have economic growth, and that hurts consumers immensely. Although this is compound complex, the base 10% tariffs that the Trump administration put on everybody, including countries we have surpluses with, like Australia and Britain, you may never see that. Okay. And the reason you may never see that is because the dollar should get its mojo back, should be appreciated against countries that have weaker economies, lower interest rates. And as a result, that currency appreciation will offset the base 10% tariff that they'll be opposing. Now, as far as the higher tariffs for the countries um, that they put higher tariffs on because we're treating them like they treat us, but we only made our tariffs half as much as what they do to us. Um, what's interesting is a lot of companies are going to try to hold the line and not increase prices. So Ford has already announced employee pricing for all their new customers. Hyundai, as I mentioned earlier, is not going to increase prices until maybe June. They're going to reevaluate things. Others, like Volkswagen Group, now they're going to hold their vehicles at port, slap on the 25% tax, and then they'll have an inventory glut, and they'll probably be forced to sell the vehicles with financing deals. So, will some of this trickle down to consumers? Yeah, it will. I mean, and it will affect things like Walmart. They have a lot of things from China. The other thing I want to reiterate is I don't expect a lot of countries to retaliate like China did, because if you retaliate against Trump, he'll just raise your tariff more. Trump wants you uncomfortable when he negotiates with you, and it's just who he is. Read his book. The art of the deal, and that's what he's done to the entire world.
Moving on to subscriber questions. One of our subscribers wanted to know, are we in a recession?
Not officially. A recession is two contracting GDP quarters with rising unemployment. Under the Biden administration, they did have two contracting GDP quarters, but unemployment didn't go down. So they redefined the definition of recession. So they said they didn't have it, even though everybody else said they did. So whether we look at the old or new definitions, we'll know soon. But you have to have two down GDP quarters to have an official recession, and you have to also have rising unemployment. And then, of course, what happens is the Fed's cutting like crazy, and then we quickly reverse. So, no, we're not officially in a recession yet, but there is definitely a confidence problem. There's definitely confusion. There's anxiety. And I'll be totally candid with it. It's up to the Trump administration to cheer everybody up. And they haven't done that for everybody yet.
Another one of our subscribers is a lifetime member. They were wondering which is better, quantum or AI. I own both, but which one should they go heavier on?
This is the newsletters we publish with Investor Place, and thank you for having a lifetime subscription. Um, if you make me pick my best stocks, I would definitely pick the Platinum Growth portfolio. That's where I go in and handpick the best stocks from my four major letters and buy lists, and I stick to that. AI is a lot of fun. It's very exciting, but you will get a wild ride. With that said, I'm grossly overweight in NVIDIA. I have a lot of supermicro computer, so I have very big AI related bets.
Lastly, Dad, let's cut to the chase. Are you pro tariffs?
I'll let you know in a couple of years. I will see if they work or not. Near term, it hurts me because I do have a Porsche on order. I don't have a confirmed build slot. I'm waiting for it, but if and when it comes, they will be slapping that extra 25% on, and it will hurt a lot. And last week we did show that I do have a fancy British car in order, and I put a very large deposit on this car. And I would not want a 25% tariff on that, but I may get hit with that. So I'm hoping that car company might be able to sub-assemble it in the U.S. In fact, I even have somebody I recommend for it. I know they have a guy named Bruce Canepa on the West Coast that could do sub-assembly. I got a guy in Orlando that I would recommend. He builds a lot of custom cars, and but yeah, I'm going to be paying through the nose for these tariffs, so they're going to hurt me personally. You're going to see things like baby back ribs might be up because I think a lot of them come from Canada. Um, you know, the a lot of our imported food is going to be all up. So yeah, you'll probably see it at the grocery store, and it's going there's going to be some pain here. And it may hurt our farmers if countries boycott our products. Although the U.S. is so big and so efficient in farming, we'll have to see. But other countries are protecting their farm products. So, but no, it's an interesting experiment. Obviously, Donald Trump would talk about trade abuses 40 years ago when he was on Oprah Winfrey's show. Obviously, he's hell bent on doing this. Uh, I don't think I think if it works, uh, he'll go down as a historic president, but we don't know if it's going to work yet. So far, um, it's off to a very, very rocky start. And, again, Ed Yardeni did not have nice things to say about what they've done, the chaos they've unleashed. And I think Scott Bessent is the best spokesman, but it's going to be fascinating to see how this all ends. But again, I'm going to be paying a lot more for some things I've ordered.
Moving on to economic news, what do you expect from Thursday's Consumer Price Index announcement?
Oh, I hope it drops. Um, it was very good last month. We hope we see owner's equivalent rent crack. It's just being held up by a few metro areas like where you are, where rents are still high and housing costs are still high. But yeah, around the rest of the world, home prices are being cut. So we hope owner's equivalent rent, shelter costs really help knock the CPI down. Clearly, you're going to have falling energy prices. Okay. Again, oil's lowest level in 3 years. Uh, that should be helping. We'll see where food costs are. So I'm expecting a good CPI, and that will just encourage the Fed to cut, make the market rally. And then we also have the PPI coming out, and that was negative in the previous month. And we're starting to import the deflation from China. You might wonder, how can we have deflation from China when we're putting higher tariffs on them? And the answer is they keep overproducing and they have nowhere to sell it, and they just dump the goods. So and they have a weak currency. So even though we put these massive tariffs on China, it's and other Asian countries, Vietnam, Thailand, Taiwan. What's going to happen is it'll be interesting to see the bottom line. So I'm still expecting a positive PPI. And if we get some good inflation data, that will again just encourage the Fed to cut, cut, cut.
Dad, I'd like to wrap up and have you share what you tell your clients when the stock market is hit so hard.
Well, obviously, you have to be part psychologist, okay, when you talk to clients. But what I tell clients is, I'm you. I'm pretty much the median age of most of my clients. I have all my money in the market, and I feel their pain because I'm going up and down with them. And I want to assure them that I'm not panicking because I know I have very good earnings. They're going to come out and drop kick and drive my stocks higher. And those earnings should be commencing by the third week of April. So that's why I have staying power. I have literally trained myself after 47 years to live quarter to quarter and just ignore all the noise. Now, with that said, the first quarter was down. The second quarter's off to a horrific start. P ratios are being compressed, but I don't have any earnings cuts on 80 plus stocks. So that those are the ones I own. So I've got staying power. And I know that good stocks bounce like fresh tennis balls and bad stocks bounce like rocks. But I think you're going to see a big market reversal. Then I think you'll see a retest. And then I think you'll see a lot of countries capitulate to the Trump administration. And I do want to say one last thing. The ultimate goal of these tariffs are put on, not the 10% across everybody, but the retaliatory tariffs is for everybody to have free and fair trade. So if the EU comes back to the US and say, okay, we're going to drop our tariffs, please drop yours, that would be wonderful. Um, and but because uh, they don't do free trade, we're giving them tough medicine. Now, this was pretty well thought out. Again, we are doing half the tariffs on them that they do on us. Okay. And the calculations for that is another subject. But, you know, uh, they don't play fair. So we just decide to play by their rules. So, the globalists, they, they, they promote, free trade around the world. But the truth is, most of our trading partners have elected trade barriers. And the Trump administration is trying to break those down or erect them if they won't lower them. So it's compound complex. Angela Merkel probably said it best about Trump in her book. She says, when you meet with Trump, he just has to win. And all his meetings are about winning. And that is an odd personality defect, but I don't think it's going to hurt America long term. And so, I still have hope that it's going to work. With that said, I do like Scott Bessick, our new Treasury Secretary. I think he's very professional. Personally, I know Howard liked me personally. I like Howard. Okay. Can he be over the top? Yes. I find him very entertaining. But he can be a little over the top. Peter Navarro is very caustic. He went to prison for Trump because he wouldn't comply with a congressional subpoena. He's very caustic too. Okay. So, there's no one putting a bow on what they're doing, other than maybe Scott. And Scott's very eloquent, very professional. And so let's just hope he keeps leading the talking points on what's going on.
And before we end, did you really say that Italy could be the 51st state?
I did. And so this is another bizarre prediction I have. My first bizarre prediction was we'd have four rate cuts. That's going to come to fruition. So I thought while I was making bizarre predictions, I might as well just double down and make it more interesting. The reason I say Italy could become the 51st state is there is a very good chance the EU will implode. And it goes back to what Brussels is doing to the other countries. They're interfering with their elections, okay? They're disqualifying candidates. They're infuriating people. But in Giorgia Meloni's case, she's the prime minister of Italy and she's the most popular leader. Um, and she has been trying to deport some immigrants, and the EU has blocked her. So we just want to go back and remind everybody the EU was a monetary union. It was a trade union in theory if they all traded together and dropped their tariffs, and they would be stronger as a group because they're bigger than America combined. But that monetary union has now turned into a country that's just run by Brussels and is being entirely disrespectful to their leaders like Viktor Orban in Hungary or Giorgia Meloni and or the AfD party in Germany, which got 21% of the vote, and Marie Le Pen that controls a parliament. And of course, in Romania, they had a gentleman. He's a TikTok celebrity, but he won the first round in the presidential ballots, and he was disallowed. And there's no court in Romania to appeal, unfortunately. So the European Union is imploding, okay? And I don't know if they can hold together. You've seen Britain has already left. So in the event that the European Union does implode, okay, I think if I was Giorgia Meloni, I would entertain uh, teaming up with America versus teaming up with the European Union. So why would she do that? Well, one, Italy does have a lot of debt, and so whoever they team up with better be able to service their debt. That's the first issue. The second issue is we have a lot of Italians in America. We survey, I'm sure like 40% of Americans are part Italian, and it would be very, very popular. Our relations with Germany are incredibly bad right now. We might get to the point where we just have to take all our bases in Germany and stick them in Italy. So I think Italy would be a wonderful 51st state.
Well, thank you so much for answering all my questions. And thank you to you all again for liking, commenting, and subscribing. We really appreciate your viewership. If you do want to purchase Louis' new book, you can find the link in the description below. Of course, if you prefer listening to us on Spotify, that link will also be in the description. Stay tuned for next week. We will have a very special guest who is a market mover. So see you next Sunday. Thank you so much.